Hi there, Emlyn here. I just wanted to spend a couple of minutes looking at some recommendations, or one in particular from Penny Stock Profit, a James Connolly, one of the sort of penny stock newsletters that is sent out and is quite popular. I've spent a fair bit of time analysing them, and I enjoy analysing other so-called investment gurus to see whether their claims are actually true or not. And I decided to put a quick couple of minute video together to show an example of sort of a typical stock recommendation from these guys or from James at Penny Stock Profit. This particular recommendation came out on the 22nd of February. It was for Smart Holdings, SMHS, and at the time it was trading at 0.015 cents. And James was expecting this to rally substantially over the coming days. He sent a whole lot of blurb, as you can see here, about why this company's fantastic and all the things that are going to happen, and that its alarm system's going to take off and yada yada. But I mean, that doesn't really tell me that anything's going to happen in the immediate future for this company. But he seemed to be very bullish, this company, and this was the seventh stock that I actually analysed. And although this had a bit more of a dramatic move than the other securities I looked at, they were all pretty much typical of this type of move. It is worth noting, before we jump into actually what happened in the security itself, to talk about the disclaimer. And I know that people hate reading small print, but it really is sort of something that you should keep an eye out when it comes to any of these sort of newsletters. And this is a paid-for newsletter, it's not a free one, so people have to fork out a bit of cash to actually get on this mailing list to get this sort of recommendation. So here you see Penny Stock Profit has been compensated $40,000 for a one-week advertising agreement regarding Smart Holdings. So you can probably conclude that James isn't particularly unbiased when it comes to the security, and he actually goes down here to say that he has conflicts of interest, etc., which he pretty much has to say in the small print. But he seems to think that he's got some sort of fantastic system in place that can predict when securities go up. So let's see what actually happened. Now, looking at the Smart Holdings, this is the last month that we're looking at here, and as you can imagine, this is the time that things started to happen in the security. Now, as you can see, the security seems to trade in a fairly reasonably tight range here, and also does pretty ordinary sort of volumes. If I just scroll up a little bit here and close this, and you will see that the average daily volume, and that's including all this big high volume, is about 1.8 million shares, and that equates to about $30,000 a day. So not particularly high volume or value of transactions going on during the day. And this was a long weekend, a Friday and a Monday off, so this is a Tuesday opening up here, and the recommendation was sent out over that weekend to for everybody to get in on board on Tuesday. But what's interesting is that the days before the recommendation, and according to the disclaimer, you'll see that someone's paid them to go and advertise the security, and also from the rest of the disclaimer, you can actually see that James himself can front run this and also sell into the buying interest of his subscribers. You'll notice down here that the volume here, 3.9 million, this is on the Thursday, and when the security starts to rally up. So someone's now starting to put some reasonable buying interest in there, and you're seeing a volume going through of over twice the normal daily volume. And again on the Friday, 2.9 million, again, another 75% or so over the average daily volume. And the recommendation goes out, and then he said that it's closed at 0.015, which is just here. Now, what happens on Monday? As you can imagine, the announcement's gone. Tuesday, the email's gone out. The newsletter, everybody's looked at it and tried to buy in on the open, and unfortunately, you couldn't get set really here. The stock immediately jumped and traded its high within the first minute or two of trading, and then spent the rest of the day falling off. So when we did our analysis, we actually concluded that you would get set roughly about 0.019 or thereabouts. And 1.0195, and from there the security started to fall off, and the people buying into it didn't see the volume they were expecting. The daily volume, 13.7 million, huge volume for that day. So you can see that the securities hit massive volumes going on. Now, if you're a newsletter subscriber and that sort of buying interest came into a security, you should see a security rally substantially. And the reason it hasn't is obviously someone's getting out of a very substantial position and capping the ability of that stock to rally. The next day, people have got into positions. They're not comfortable. The stock is now starting to trade off and panic starts to ensue, and the security starts to head back to its long-term trending price. So it's coming in here, opening at 0.017, so you're already down 0.002 or thereabouts from the position you were set out on the day before, and down the security falls down here to close at 0.0121. A dramatic fall on the day. So that's Wednesday, again on reasonable volume of 5.2 million. And another big volume day where people are starting to go, geez, this isn't doing what we expected. We're down a substantial amount, 6.6 million securities stock trading that day, and the price continues to drop, opening at 0.0105 and down to a low of 0.008. And now it's back to its long-term average, and again the volume of people just closing their positions that have been caught on this big slide all the way down, and now it's just trending out and boring, and the volume dies right off again now. If I jump over the last slide here, you will see that I took a snapshot of the 5 days, and just sort of this is the Friday and the Tuesday, so there's Friday in here. And you can see people starting, the buying interest prior to the recommendation, and that gap up on the open. So you're getting set here if you're trying to get in on the open, and then the security just trending sort of sideways to off on the rest of that Tuesday day. So just to sort of show you there, what sort of happened on there, and this is sort of a little bit more detail of the buying and what we analysed on the actual security itself over time. And we have a general, I've got no axe to grind because I didn't take a position, I just analyse it. We take an automatic assumption here that if a security gets to 50% or more loss, we automatically close a position. That happened on February 24th. So you're 2 days into your position and you've lost over 50% of the value of your position from the open, which is a pretty dramatic loss in anyone's books, 50% in 2 days. By this stage, if you'd held it open, you'd be down approximately 60%. And this is fairly typical of most of the recommendations that we saw. But if you'd like to see more, then there's plenty of analysis that we've done that you can look at. It's pennystockprofitinfo.org. Good luck with your trading. Thanks for your time and take care. So people have to fork out a bit of cash to actually get on this mailing list to get this sort of recommendation. So here you'll see Penny Stock Profit has been compensated $40,000 for a 1-week advertising agreement regarding Smart Holdings. So you can probably conclude that James isn't particularly unbiased when it comes to the security, and he actually goes down here to say that he has conflicts of interest, etc., which he pretty much has to say in the small print. But he seems to think that he's got some sort of fantastic system in place that can predict when securities go up. So let's see what actually happened. Now, looking at the Smart Holdings, this is the last month that we're looking at here, and as you can imagine, this is the time that things started to happen in the security. Now, as you can see, the security seems to trade in a fairly reasonably tight range here, and also does pretty ordinary sort of volumes. If I just scroll up a little bit here and close this, and you will see that the average daily volume, and that's including all this big high volume, is about 1.8 million shares, and that equates to about $30,000 a day. So not particularly high volume or value of transactions going on during the day. And this was a long weekend, a Friday and a Monday off, so this is a Tuesday opening up here, and the recommendation was sent out over that weekend to for everybody to get in on board on Tuesday. But what's interesting is that the days before the recommendation, and according to the disclaimer, you'll see that someone's paid them to go and advertise the security, and also from the rest of the disclaimer, you can actually see that James himself can front run this and also sell into the buying interest of his subscribers. You'll notice down here that the volume here, 3.9 million. This is on the Thursday. and when the security starts to rally up. So someone's now starting to put some reasonable buying interest in there, and you're seeing a volume going through of over twice the normal daily volume. And again on the Friday, 2.9 million, again, another 75% or so over the average daily volume. And the recommendation goes out, and then he said that it's closed at 0.015, which is just here. Now, what happens on Monday? As you can imagine, the announcement's gone. Tuesday, the email's gone out, the newsletter. Everybody's looked at it and tried to buy in on the open, and unfortunately, you couldn't get set really here. The stock immediately jumped and traded its high within the first minute or two of trading, and then spent the rest of the day falling off. So when we did our analysis, we actually concluded that you would get set roughly about 0.019 or thereabouts, and 1.0195. And from there, the security started to fall off, and the people buying into it didn't see the volume they were expecting. The daily volume, 13.7 million, huge volume for that day. So you can see that the security's hit, massive volumes going on. Now, if you're a newsletter subscriber and that sort of buying interest came into a security, you should see a security rally substantially. And the reason it hasn't is obviously someone's getting out of a very substantial position. And capping the ability of that stock to rally. The next day, people have got into positions. They're not comfortable. The stock is now starting to trade off. And
today, I want to talk to you about how a penny stock works. All right, penny stocks are a scam. Here's how a penny stock works. Someone comes out and starts hyping up a stock that is trading on cents on the dollar for a share. And this company might have no real value at all. It's just a shell company. And the investor guru person will come out and start hyping up this company and getting people interested in it, and say, they might not even reveal the identity of the stock or the company until a certain date. And then they'll say, hey, everybody jump on this. This is going to be the next big thing. Now, the person hyping up that stock, which is only worth pennies, probably bought several thousand shares, could be hundreds of thousands of shares. And then once all of his subscribers, or the people he has sent this information to, get it, if they act on that information, they buy a bunch of shares, then the price of the stock goes up exponentially for a very short period of time, until the majority shareholders sell all of their stocks and liquidate. And then the people who bought towards the end now are going to lose all their money, because the price is going to come crashing back down. So that's how a penny stock works. Now, penny stocks may not be explicitly advertised as penny stocks, although sometimes they are. But you just need to be on the lookout for any time someone comes around hyping up some stock and saying they're going to pour all of their life savings into something. Sometimes they'll give reasons that sound logical and sound even, and you'll think, well, this company does sound really good. Always check the financials. Always make sure that the company has real deals, real vendors, and that they're not going around to conventions and just putting out press releases to make themselves look good. If you have any doubt, check the price to earnings ratio and check their earnings. If they have no real earnings, chances are they're not going to blow up overnight, and they're not going to be the next success. That's just usually not how things work. When investing in the stock market long term for success, your best bet is to buy low and sell high, but always look for value when you make your determinations on which stocks should be in your portfolio. Well, I hope this information has helped you, and if you have any experience with penny stocks or frauds like that, please leave a comment below. I hope this has helped.
Put the kids to sleep. Take the phone off the hook, and ignore that email that just came in. Because as you watch the short 15-minute wealth report that I must tell you won't be online for long, I'll open your eyes to a hidden, almost secret market that can multiply your money 425%, 566%, even 1,150%. And it's important you know something right up front. I'm not about to tell you about a big-ticket trading course. I'm not going to ask you for a monthly subscription to an overhyped investment newsletter. And I'd never insult your time with some magic piece of trading software that'll make you a gazillionaire overnight. No. What I'm sharing with you today is a world away from all the usual nonsense. And most important of all, it's something ordinary investors, people just like you, are using to lock down triple-digit returns on their money. Returns like 136%, 362%, and 425%. Huge gains that almost force you to rub your eyes to believe they're actually real. The best part? If you've started off with very limited capital, even as little as $200 in seed money, you can do this. If stock market jargon makes your head hurt, no problem. You can do this. Heck, even if you've never even traded a baseball card before, I'm 100% sure you can do this. Because as I'll prove, although the last decade has been a multi-trillion-dollar bloodbath for ordinary investors, others have escaped without a scratch. With my help, they've ridden a hidden, almost secret market to the fastest gains anywhere in the financial universe. And now it's your turn to join them. In fact, very soon I'm going to show you a real-life example of how with zero trading experience and almost no risk, $1,000, true chump change in investing terms, can, in 5 simple steps, turn into a golden parachute worth an amazing, $5.7 million, or $5,736,354 to be more exact. And I'll promise you now, it won't sound so unbelievable in a moment, because you'll soon see how every penny of potential profit can be traced back to Wall Street's best-kept secret. Penny stocks. Bought and sold for less than $5 a share, these fast-gaining stocks trade on well-known exchanges like the NASDAQ and the New York Stock Exchange. But let's not dance around the bad press these stocks receive. You've probably heard that penny stocks can be richly lucrative investments, but that they're also notoriously risky. Well, I can confirm something for you right now. The vast majority of penny stocks are risky. In fact, I'll happily go further than that. After grinding the numbers on thousands of penny stocks over the years, I'll shout it from the rooftops. About 97.32% of penny stocks are trash. They're worse than just bad investments. They're radioactive to your prospects of growing old without money worries. But here's why you should scoot to the edge of your chair and pay attention to the rest of this short video. Not all penny stocks are duds. Far from it. About 2.68% are the titans of tomorrow. Small, innovative companies who are about to careen up the stock market growth chart. Hi, this is Nathan Gold, the penny stock egghead. And as my loyal subscriber family knows so well, penny stocks that survive the proprietary gauntlet of analytical obstacles I throw in their path can quickly accelerate in value 362%. And when I say quickly, I mean it. You can sometimes watch them spike in price in as little as 14 days. Yes, only 2 weeks. You might not get that kind of return from a household name blue chip stock if you held it for 2 decades. And I know that unless you're someone like me who follows the markets almost 24/7, this next stat is going to blow your mind. You might know about the decade-long implosion of the S&P 500, the index that tracks the performance of expensive blue chip stocks like Coca-Cola Company and eBay. It's advertised by Wall Street as the ordinary investor's best friend, but instead, it's become their retirement killer. Right in front of their eyes, it's pulverized a mind-boggling $9.6 trillion of investor wealth into worthless rubble. Yes, that's trillion with a T. And if that's not bad enough, let me really put this last decade into disturbing perspective. On average, if you invested in this S&P debacle, you watched each of your hard-earned dollars shrink, all the way down to 79 cents. That's more than just a dream-crushing negative return on your money. That's grand larceny! But as many Americans have fallen victim to this stock market robbery, others have found it easy to protect and grow their money, locking in gains of 136%, 400%, even 425%. Their success may have blown the minds of their friends and family, but the reality is, these ordinary Americans shocked themselves. Because it's safe to say, many started out intimidated by the mere thought of trading a stock, only to discover that it's much simpler than Wall Street insiders want you to know. How simple? As simple as making a short phone call or clicking your mouse a few times on a website. And because they took action, these everyday Americans have become the unexpected winners in the race to wealth. Their prize? Instant investment income. and a growing nest egg that can support every wish they have for their family's future. Every single wish. It's not going too far to say, those who wisely invest in high-quality penny stocks have every right to ask, what recession? And here's why. Since April 2000, the value of the S&P 600, the index that tracks small-cap penny stock companies, has roared up 117%. Remember that in the very same time span, pricey household name stocks destroyed $9.6 trillion of hard-won wealth. Yet, unknown to most investors, as the rest of our economy tanked, these overlooked penny dynamos hung tough, dishing out returns of 362%, 566%, and 1,150%. The best part is, this is nothing new. Jaw-dropping profits have been secretly flowing from penny stocks for decades. Tom Gardner, an investing historian, states that small-cap stocks have substantially outperformed the overall market over the past 40 years. That's right, these under-the-radar stocks that sell for less than $5 a share, and often for literally pennies, have been the most explosive investments in any portfolio since back in the good old days. Back when gas was only 36 cents a gallon, and a visit to the Exxon didn't feel like a mugging. But I know what you're asking yourself. Since these dirt-cheap stocks can soar in value so fast, why don't I hear about them on CNBC or Fox Business? That's a great question with an easy answer. Penny stocks remain a hidden and almost secret wealth creator for one important reason. They're simply too small for the big investment banks to trade. See, in theory, investment banks could buy hundreds of millions of penny stock shares at once. However, if they did, they'd come up against an insurmountable problem. Their big order would skyrocket the share price, stealing their potential profits. So, because bloated profits aren't on the table, the big bankers simply don't show up. That's why there are always wallflowers at this almost secret profit party. What's more, since the financial media are in the pockets of the big banks, they don't point their cameras at penny stocks, however eye-popping their returns. It's no wonder so few people know about penny stocks, or take advantage of their dizzying climbs in price. And you know what? It's actually better this way, because it lets us monopolize these almost secret stocks for ourselves. You know, let's back up for 1 second. I want you to really imagine this. I mean, really go there in your head. How different would life be today if you'd got in early on a Goliath like Walmart when it was a little-known upstart? What about Cisco? Microsoft? Dell? You know how life turned out for early investors in these Wall Street darlings. They live high off the hog, financially set for the rest of their lives, but only because they got in quick and early. They acted before the investing masses jumped on, shooting the share price from dirt cheap to downright extortion. Now, these high-priced old hands have seen their best days when it comes to handing investors explosive paydays. Penny stocks, on the other hand, have math firmly on their side when it comes to banking lightning-fast gains. For example, say a penny stock rises 20 cents, from 3 cents a share to 23 cents a share. What seems like a small 20-cent gain in price is actually a giant 666% gain, and enough to turn a $1,000 stake into $7,666. You could find a way to spend that, right? Now, on the other hand, let's say you invest in a blue-chip stock. A single share could easily cost you as much as $350, and in some cases, much more. Only this time, using the same example of a 20-cent increase in price, you don't make out like any type of bandit. You make out more like a beggar. Because although a 20-cent price increase rocketed your penny stock holdings from $1,000 to $7,666, it doesn't do the same for your blue chip stock. It only turns the same $1,000 stake into $1,000.57. Yes, you're a pathetic 57 cents richer. That's not going to put the kids through college. Really, you'd make more money holding out a plastic cup on a street corner. And whether it's Apple, Walmart, or any other company in the dusty blue chip brigade, odds are none of them are going to see their stock rocket by 362% like one of my picks achieved in a matter of only 14 pulse-pounding days. This little engine that could was overlooked, undervalued, and almost totally undiscovered, even by me. It found its way into my subscribers' hands because it gutted out every analytical test of strength I threw in its path. See, it was among the rare breed of penny stocks that ace what my subscribers fondly call Gold's Gauntlet. The proprietary numbers grinder I insist every penny stock survive before it even becomes a candidate for intense review. Now you're probably starting to see why my subscribers have given me my egghead moniker. I'm a card-carrying numbers nerd. For me, the stock market, in all its complex numeric beauty, is the baddest math puzzle on the planet. And most importantly for you, it's an ever-changing puzzle I wake up each morning determined to solve. In fact, you might even say we've already met. Yep, I'm that dorky guy in school you used to sneak answers off of during brain-frying calculus exams. Only now things have changed. Now you can ethically steal all my investing answers without visiting the principal's office. And what I want to share with you now is something pretty extraordinary. Because right now, I want to show you how $1,000 turns into $5.7 million, and in just 5 simple steps. But before we see how this amazing trade wave plays out, let's address what you and I are both thinking. Is this a likely scenario? In just 5 simple steps, should you or any other investor hope to turn $1,000 into $5.7 million? And the answer to my eyes is clear. Absolutely not. The chance of stringing these trades together, then snowballing every dollar of profit forward, well, it would be like filling out a 100% accurate March Madness office pool. The odds are slim, to say the least. So why am I sharing this hypothetical demonstration? Well, so you can get a taste of the full potential of receiving my 1 trade a week penny picks. That said, these trades are actual picks in chronological order that I've shared with my family of subscribers. And remember, just because this is improbable doesn't mean it's impossible and that it couldn't happen one day. Couldn't happen to you. Step 1. See $1,000 become $4,625. Sometimes a company's numbers almost grab me by the shirt collar and demand I delve deeper. That was the case with AXTG, a spitfire of a lighting technology company that was overdue a breakout from 75 cents. Just 2 weeks after I alerted my subscribers, that breakout arrived. A 362.67% return later, and the stock had risen to $3.47, which meant your starting stake of $1,000 is now worth $4,625. With this new money in the bank, you can pay off a credit card, or take that trip to Europe you've put off for decades. But before we go further, let's pause for a quick moment to assess what just happened. You just felt the rush of a winner, but it pays to play it safe. The smart penny stock investor that you're about to become will pull their initial investment.
For more information, click on the link below.